Hey guys, this is Andre from Wealthy Neighbor, and in this series of videos I will talk about risk. So how risk affect our lives, how we see risk in general, and since this channel is about finance and personal finance, what is the financial risk and why should we see financial risk similarly to the other kind of risks that affect our lives? After all, they are not that different. Take a minute to read this disclaimer, and if you agree with all the terms and conditions, let's move on. So first, I'll start talking about a definition. I'll give you guys a definition about financial risk. I'll talk about some variables that affect how we perceive the financial risk and how it affects us. Then some considerations about why they take risk at all. This topic will not be only about financial risk, but now we'll start to talk about risk in general, risk in life. And to wrap up this first video, I'll talk about surfing analogy. So I'll make some analogies about the risk involved in surfing and financial risk and what can we learn from it. So let's go. What is financial risk? Basically, a financial risk is related to the volatility of the market, right? So say stocks, for example, we can see stocks that have the price going up for a very long time or going down. This defines the price trends, but every price trend is not a straight line. Throughout this trend, there are what people call smaller trends that make the price go up and down day to day or week to week. So all this volatility is defined as the market, is defined as one aspect of the market risk. So basically, when we talk about financial risk, one of things we are talking about is the risk of losing the investment's principal. So basically, when we have those growth-based investments, such as the stock market or real estate, we have our capital at risk because we risk losing the principal, not only our profits. Whereas if we are talking about the lending type of investments, such as bonds or debentures, in this case, we are a little bit less at risk because we have a kind of guarantee that we'll get the principal back at least, and some kind of interest over on it after a certain time. So we can say that on lending investments, there is less risk because the principal is safe, and also different risk can be considered as losing previously earned returns. So for example, say last year the stock market was doing very well and we got 20% return, but this year it's not going that well, and then we get minus 20% return. So what does this mean? We lost everything we made last year. Actually, we lost more because to get back our 20% earnings, we have to earn more than, to get back to 20%, we have to earn more than 20%. So this means that we lost everything we earned last year. And what could we have done to avoid it? Maybe sell the investment to lock in the gain and then invest the resulting amount in something else. So by doing that, we would be locking in the gains from previous year. But since we did not do that, we lost everything we made last year. So this is another risk, right? Besides losing the principal, losing what we have already earned. Also, what I consider a financial risk, the cost of opportunity. If we are investing our money in a bad investment with low returns or some kind of fund that's not performing very well, we are actually we may be even losing money, but we are also losing the opportunity of investing this money in something more profitable, some investment with better return, or even something that make us happier, like traveling, or I don't know, buying a better car, or moving to a different place. So this is the cost of opportunity. Once you lock in your cash in some investment, uh, you are losing the opportunity to use this cash somewhere else. And finally, the last financial risk is inflation. So even if you don't do anything with your money, usually as time goes by, this money is losing its purchasing power. So say the inflation is around 4% a year. So 1 year from now, something that we could buy today for $10 will cost at least $14 1 year from now. So if we only have $10 and we don't get any interest on this money, we will not be able to buy the $10 thing anymore. So this is inflation, guys. This is how inflation affects money, and this is why I consider it a risk, because if we don't do anything, we lose purchasing power. Now, what kind of variables can affect financial risk? Obviously, how much is at stake? So if you are investing $5, you are pretty chill, right? You don't care that much about what's going to happen with your investment. So many people consider buying a lottery ticket an investment, but it's not a very good one, because the odds of returning anything are very low. But how much is a lottery ticket? Like less than $5. So many people don't even think about it. Like they just buy it because it's pretty cheap and there's not much at stake. And on the other hand, if you want to invest in real estate, for example, if you want to buy a new house to rent, you have to pay $500,000 more or less, and that's a huge investment. Like you have to think about it, right? You can't just make this decision on a whim. What if the house you buy, the neighborhood is pretty bad, or some, I don't know, or even if there's some kind of natural disaster in the city you bought your house and your investment goes down the drain. So you have to consider a lot of things. If the amount you're investing is bigger, right, you have much more to lose. So second variable, time. How old are you right now? How long have you started investing, saving and investing? And how soon do you need this money? So this is why making plans is very important. If we have a plan, we can prepare and we can prepare for it. We can try to simulate how things will go, and if things don't go as we assume they would, we can change our plan. We can be flexible. So, for example, I want to retire 30 years from now. So, how much should I save every year? And what kind of investment should I look for? If I plan accordingly, I will, the goal of retiring 30 years from now will be much more certain than if I just wait for 30 years and then think, oh, I'm just going to retire. So this actually doesn't work, or at least it's very hard to work. The third variable is knowledge. Actually, some people say knowing little is actually worse than not knowing anything at all, because when you know a little bit about something, you might want to risk try it to see if it works, so you don't have the whole picture, the information to make your decisions. You just have a little piece of information and then you act on it. This can actually be more dangerous than not having any information at all, because if you don't know anything, the odds are that you stay away from it. So this applies to investments, right? Different investments. So some people don't know stocks, don't know what a stock is, have no idea what this kind of investment is. So they will just invest in their savings account. But some people see on the news that the stock market is doing very well. The Nasdaq or the S&P 500 were up 5% yesterday. And then they will go and put a lot of money in the stock market. But the stock market's going up today. The odds are it will go down tomorrow, because it tends to the mean, right? You buy a lot of overvaluated stock today, and then tomorrow you see the price go down, you see you're losing a lot of money, and then you get desperate and you sell on a loss at the worst possible time. So you're going to lose a lot of money. Why? Because you don't have the whole picture. You don't know that. In these cases, you should hold for a while before selling your investment. You only sell if you actually need the money, or if it's your strategy. You're doing day trading and you have a stop loss set. You don't sell just because you're desperate, because you're frightened of steeper falls. So as long as you have enough knowledge about what you're doing, what you're investing, what you're spending your money on, what the risks are, that's pretty good. If you don't have enough knowledge about it, look for it, search, research, read books, watch videos, do your best to get to know what you're getting into, because that's your money, okay? And finally, luck and random events. Yeah, we can't escape that, man. As much prepared as we can be to anything that we think might happen in the future, we will always be surprised, because that's what random events are about. They will happen and they are not predictable. Okay, so you should be aware that you might be surprised, but you have to work to make this surprise as less dangerous to you as possible. And how can you do that? For example, create an emergency cushion or a safety cushion. It should have some money in a liquid account to cover your losses. Or for example, if you lose your job, you have some money saved to keep you going for 3 to 6 months. You don't need to get a loan and get this huge debt. You already have some saved money, so you're prepared for a random event, bad luck, losing your job. You're kind of prepared to the future. But unfortunately, though, those events are not predictable. The best we can do is prepare ourselves as much as we can and as reasonably as it can be, because we shouldn't also be paranoid and thinking that bad things will happen all the time. So there is also a trade-off in this aspect. Now, why take risk? Why take financial risk? So the most important thing here is to have a plan, right? Because when we plan accordingly, when we have time and we have an objective and we have these goals we can check through time, then maybe we can choose how much risk we actually need. We don't need to take unnecessary risk. But one thing for certain in the financial markets is that risk and the potential returns are directly related. So the greater the risk of the investment, the more you can expect to earn from it. This is why lending investments yield lower returns than ownership investments. What I'm trying to say is, for example, treasury bond will pay less interest than the stock market returns. Why? Because the stock market is much more riskier than the treasury bond. And now the other topics are not only related to financial risk but risk in general. So why people take risk? Some people think that life is boring without risk. I mean, yeah, they are right, but it doesn't mean you should be a daredevil. uh, Consider what kind of risk you want to take. Think about it, see if it's worth it, and then prepare yourself as much as you can for it. New opportunities usually come with risk. Why? Because we don't know about the future. We never know what can happen. So if we want to change the if we want to change our lives, we want to change something in our lives, we have to risk a little bit, right? We have to get out of our comfort zone, do something that we don't usually do on a regular basis to see a different result. And then we can evaluate if this is what we wanted, how can we improve from it, and all these other aspects. But generally, if we just keep doing the same thing every day, uh, new opportunities will not come up from nowhere. We have to go after them, and going after something means risking. And also, some people might take risks to prove themselves to themselves or to other people. I don't know if that's really wise, but this is also a possibility, and this may be okay for you. But again, every time you are taking risk, think about it. Think if it's worth it. Think how can you prepare for it the better you can, and then go for it. Because there is a grain of truth in this. Life is boring without risk. Life is boring if everything you do is just the same every day, and you are not evolving, you are not moving forward. And this might make you depressed or something like this. So taking risk is actually really good for us. It makes us expand our horizons, get new ideas, know new people, see the world in a different perspective. But always consider the risks you are taking and check if they are worth taking. And finally, the surfing analogy. Well, I know that surfing has nothing to do with financial markets. I mean, they are completely unrelated topics. But why am I talking about surfing? So, a little bit about me. I really do like surfing actually. I started it maybe 4 to 5 years ago. And you know how some people are like weekend athletes, that they just run or ride a bicycle on Saturday and Sundays, and they don't have this strict training schedule. So in my case, you can say I'm a 4 times a year surfer, or even less. I can't even remember the last time I rode some waves, maybe 6 or 7 months ago, but still, I do like it. And there is actually a lot of risk involved in surfing. Not financial risk. Also, there is some kind of financial risk because you have to spend some money to surf, The equipment is not that cheap, but the most important thing is, I would say, is the uh, what can I define as a life-threatening risk, right? Because you can die if you surf, you know. Of course, you should prepare yourself. You should learn how to swim. You should avoid those huge waves, and you should do your best. But there is always that risk. So let's see how this surfing analogy works. So first item, well, what I've talked about previously in this video many times, is the risk. Is the risk worth it? I don't know about you, but for me it is. I like surfing. I like the ocean. I like being on the outside, you know, feeling the wind in my face, that peaceful ocean, and I I'm not a huge adrenaline fan, but it's so cool to ride down that wave, you know, being able to catch it and ride it down. This is one of the best feelings I ever. So yeah, it's a risk worth taking in my opinion. Now, what does surfing need? So first of all, if you live in the countryside, you can't surf because you need waves, you need the ocean. And even if you live by the ocean, you can surf every day because you no one can surf on a flat ocean. So you need waves. You need a specific setup that will make waves at least, I don't know, 1 to 2 feet tall, or maybe bigger if you are a better surfer or you're into big wave surfing. But we do need waves. Also, we need the equipment, a surfboard, clothes like wetsuit if it's cold, or we need the leash, we need fins, and everything else that goes with the surfboard. And this costs money, right? We can, if we don't want to buy our own stuff, we can rent, but still, we're spending some money on it. And the third thing we need is what I call here physical and mental fitness. So we need to be prepared. We need to be able to paddle hard to catch that wave. And we also should not be afraid. I mean, you can respect, you must respect the ocean. It's stronger than you, but you cannot be afraid all the time. You can't be frightened, and because if you are, you start panicking, and then you lose a lot of efficiency, right? So you must feel that things are under your control. So you need to prepare yourself. You need to train. You need to run. You need to swim to get a physical fitness level, and you can effortlessly paddle and catch the waves. And you need to feel comfortable that you will be able to swim back up if you're start to drown, or you need to feel safe. And basically what I'm saying here, we need to commit. We need some level of commitment. The better you want to be, the more you have to commit, or the harder your circumstances, the harder you have to commit. So in my case, if I want to surf, I have to drive for 2 to 3 hours down to the coast, and then start surfing. And I usually do a day trip, so I will surf for 2 to 3 hours and then drive all the way back. So it's really tiring. I have to spend on gas, tolls, and I also need a car, and also have to buy all the equipment. And I also run on a regular basis to keep my fitness level, you know, to be prepared for the exercise. So I'm committing time, I'm committing money, and I'm committing effort for this activity. Now, you should consider what's the worst case scenario, what's the riskier situation that can come from surfing. So In my opinion, I guess the worst case scenario that can happen when I'm surfing is dying, right? I mean, I can die by drawing, or maybe there are sharks in the area. I can get a shark bite and get seriously hurt, or get hit by some other surfer, or I can also wipe out and hit a coral bed, or and get some cuts, or even, I don't know, break my spine and not being able to walk ever again. And then, since I'm probably passed out, I will die in the ocean if no one helps me. So there's a lot of danger, there are a lot of risks in surfing. But the first item, is the risk worth it? Yes, it is. So what can I do to prepare myself? So, for example, practice swimming, right? Until I'm confident in my swimming skills, that I'll be able to get back to the sand if anything bad happens. Even I, if I'm tired, I know I should know my limits as well. So if I start to get too tired, I'll just quit and go back to the beach, or and also surf with a friend. Actually, I've had a couple of close calls in which, if I weren't surfing with a friend, I would probably be dead by now. But I'm still surfing, so you can say I'm kind of a jackass and I don't care about many things. But after those close calls, I learned, and I've been doing my best to avoid being caught in this situation again. So, yeah, I've been practicing how to swim. I've been always careful about surfing alone on my own. Even though I don't like being around a lot of people very much, I will still try to look for other people while I'm surfing. Okay, so here in Brazil, we don't have a lot of sharks on the oceans, so that's good for us. But if you live in a country with sharks, you should be able to do shark signs, and also the lifesavers will say some stuff if it's okay to go into the ocean or if it's not. Also, should be aware of surroundings, and mind other surfers, mind ourselves, and always be careful. Protect our heads. Surfboard won't hit us. Okay. Also, what can I do to avoid those wipeouts, this bad wipeouts? So, just surf waves that I'm comfortable with. For example, I would, at least at my current level, I wouldn't even go into the ocean if the waves are 5 feet tall, But I would just sit and watch because I'm not comfortable. It's too dangerous for me. I like surfing, but I don't want to take all this much risk. So I just won't do it. And yeah, the coral thing, here in Brazil, we also don't have coral beaches, but if you do in your country, and if you're a beginner or if you're not comfortable, you should just avoid shallow coral reefs, right? So we can do a lot to mitigate and minimize risk. Even though we are doing a very risky activity, we can prepare ourselves for it, and we can do our best to make it fun, so we can have fun with it and not be afraid all the time. So, what can we learn from the surfing analogy? I would say there are three really important topics we can take from it and apply to financial risk or risk in other aspects of our life. So, first, your commitment level. How far are you willing to go for something you want to do? So, how far am I willing to go to surf? I will drive for 6 hours round trip. I will buy my own surfboard. I will practice running every day to keep my cardio. I'm willing to do all of those things to surf because I enjoy. This is an activity I enjoy. This is something I like doing. So I'm kind of committing myself to it. So this is the first point. Second point, know how wrong can it go. Know your worst case scenario. And third, be prepared for it as much as you can, as reasonably as possible. So again, you don't want to be paranoid. You don't want to think about bad things all the time. And you want to prepare yourself as much as you can for what can happen. Right? So I will learn to swim, and I will surf with a friend or when there are other people, and I will not surf if the waves are too big. So I'm taking care of myself. I'm protecting myself. I'm not willing to take risk I don't need or I don't want, but I'm still taking some level of risk. So this is how we should see the investments as well. Stock market, for example, there is a lot of risk, there is a lot of volatility, but if we want the high returns the stock market brings, we should invest in the stock market. But we also should be aware of the risk. We should know the best practices to minimize the stock market risk and anything else we do with our lives. And this is it for this video, guys. In the following video, I will bring some more analogies about risk in life. And in the last video, we'll wrap it all up and go back to the financial markets. Again, if you have any questions or comments or suggestions about this video, feel free to leave a comment or an email, and I'll get back to you as soon as I can. Thank you for watching, and bye-bye.